late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, I needed some focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was hard, just a test.
Hey guys, welcome back. Today we're going to talk about Bitcoin. I want to look at the cycles. So we have kind of had some a bit of a breakdown in Bitcoin recently. So I want to take a look at this price action and see what might be potential paths going forward. There is three kind of scenarios that I'm looking at potentially playing out over the coming months, and it's really going to kind of depend how the price action plays out in the near term to kind of figure out which of those theories is likely to play out, and then how can we position ourselves to kind of protect ourselves from the downside if kind of one of the more negative scenarios were to play out. So without further ado, I'm going to jump into the charts over here. So I'll just flip over here for you. We're going to start here. This is our indicator dashboard for the Bitcoin and crypto market here with Into the Cryptoverse. So again, you're welcome to come here, sign up for a free account. They also have a paid service as well. So we're just going to be looking here, take a look at these different indicators, because essentially a lot of these indicators are what people are watching for signals of a cycle top in Bitcoin and crypto. So I kind of want to take a look at all of these indicators kind of as a whole, as well as look at some individually, maybe identify some trends and talk about some potentials going forward with some of these. So ultimately just looking at it from a broad perspective here, we're looking at relatively low risk in terms of a market cycle, potentially not indicative of a market cycle top if the top isn't in. So we will take a look at some of these indicators individually, get a better idea of what's going on. But the end goal is we want to figure out when the cycle top is. Have we topped, or do we have another leg up? What are the potential options? What are the potential paths? So we're going to take a look here at some of the indicators individually. So I'm going to start over here. This is the logarithmic regression rainbow. So why I want to show you this one here, essentially what we've seen each cycle, we see the price action there laid within that rainbow band. Every single cycle, the peak has dropped 2 bands from the prior cycle peak. So I'm going to show you right here the first cycle there in 2011, 2012, we saw going up to the 12th band here. So if I get rid of the 12th and the 11th band, we then see that the next cycle peak right here at that lower band. So now we get rid of the 10th and 9th band, and we see right there, right around that peak, just shy of it. So not actually making it all the way to that peak for the cycle high. Moving on, taking a look, this is our next cycle. So that was last cycle, topping in 2021. And then we come into our current cycle here. So we're looking at a 4th band as the potential cycle top. So looking at this just from kind of a broad perspective, we got halfway there in between the 3rd and 4th band here. We weren't able to really push up to that 4th band, experiencing some weakness since then. So there is the potential, if we do get another leg up, maybe we end up somewhere here close to that 4th band. You know, my target personally for Bitcoin for this cycle was around 120 to 125,000. That was kind of my middle case. So we do have that potential to still revisit those highs, potentially put in new highs. I'll show you that on the charts later and kind of talk about that potential. But we do see here, for now, we're just holding in between the 3rd and 4th band. So as long as we're in here, we do have that potential for the band 4 to be the cycle top. And we see as time goes on, this band increases. So we want to see some strength here, a bounce from Bitcoin, try to get back up towards that upper band here. I want to show you, we're going to look at some of the individual indicators here. So we'll take a look. The ones I want to show you, the first one here is the Bitcoin Puel multiple. So we look at this one. This is a really common cycle top indicator that people watch. And people are waiting for these elevated targets up here for the cycle tops. But I'm kind of just looking at a lot of these charts. I'm seeing a lot of kind of downsloping trend lines that they don't coincide perfectly with the peaks, but you can tell here as time goes on, this indicator has just gotten less extended with each cycle. So essentially, if you look at this, you could consider this, if you considered it a valid trend line, that could actually be indicative of that cycle top because it has reached the upper band of this downsloping trend line. So we're not really going to know what's kind of going on here. We also saw kind of just downsloping here. losing a little bit of that extension each time. We're flipping over to the MVRV score, so another cycle top indicator, another one that I've just noticed is kind of down sloping this trend line all the way through these highs, so less and less extended with each subsequent cycle. That kind of makes sense when you factor in diminishing returns and the growth of the asset. As the asset continues growing and attracting more liquidity, you lose some of that volatility, and yeah, you lose some of that kind of crazy price action as the asset continues to be adopted and draw in a lot more liquidity, as I mentioned. So it's not out of the realm of possibility to expect these indicators to not flash as aggressively as prior cycles. Also, just we'll get into kind of the social metrics as well and kind of a mania phase, but we'll just continue on. Just more of these looking like they're just lesser and lesser extensions with each subsequent cycle. So it's kind of a trend I noticed in a lot of these different indicators here. Like we can look at a ton of different ones and they're all going to look very similar. So we see here also kind of just down sloping that trend line, down sloping here, the trend line right through here, you know, still high enough where it's arguable that this could coincide with the cycle peak if we're under the conditions that kind of cause a macro breakdown in kind of other markets such as the SPY. So we flip back, we'll take a look at a few more here, but essentially these are all going to kind of look very similar. We look at fear and greed. Looking here, this is just a color-coded visualization of kind of price action during the peaks. So we see here through kind of this cycle here, we had our double peak here. So getting greed up to 84 on the second peak, and it was at a kind of got into the 90s here on the first peak. So on our first peak right here, we did get up into 80s, high 80s here, 92 right there. And then we've also got up into the 90s, 80s, up through here as well. So just recognizing that this had two peaks here of kind of excessive greed in the market. So also a little similar to that prior cycle. So we need to pay attention to that. Taking another look at some other indicators. So they're all going to kind of look like they're trending down a little bit in terms of some of these averages. I'll show you here. Same thing, down sloping trend, less extended with each subsequent cycle. So I could basically go through all of these. They're all going to look pretty similar, down sloping. So we're just going to look at them all together here. If I take the on-chain metrics right here, this will just pull up all of these indicators down here, and it's the same thing, less extended with each subsequent cycle. That's what I'm trying to show you. So looking at that, we'll also take a look at the social metrics. So this is one that people are really, kind of has really deviated from the prior cycles. Essentially, when we see a lot of new market entrants, we get a lot of new liquidity in the space, and we'll see lots of the social metrics start to go up aggressively because people are following different people for information. They start subscribing to YouTube channels, following Twitter pages. So during a typical mania phase in prior cycles, we did see excessive social risk. That being said, there could be an argument that because of the current economic conditions, that essentially retail investors or the average person doesn't have the excess capital to be investing, especially in speculative assets. So there's a few worrying macroeconomic conditions, such as the tariffs that we've talked about and a potential looming trade war. There's we have the Bank of Japan continuing to raise rates. Their inflation is also ticking up quite aggressively, so I expect more rate hikes from the Bank of Japan. And with those rate hikes comes continued unwinding of the Japanese yen carry trade, and that has a negative effect on stock markets. So a few different things that could kind of throw a wrench in the plans here, cause a bit of a breakdown in the stock markets. So we're going to have to see, if a macro breakdown occurs before we get any new liquidity or new retail into the space, then I don't see this metric actually moving up durably and kind of getting up to these previous highs. But it's impossible to really tell what's going to happen in the future. So just following that social metrics, but also recognizing, some of these indicators, despite not reaching quite as high of historical values, it could be argued that somewhat of a top could be in for them, but we're only going to know as time goes on. It's kind of just speculative at this point. I want to also flip over here. There's just a few interesting things going on right now in the world. So we have stocks falling, like the trade war is officially back. Trump actually actually did just announce that he's going to put tariffs on Canada and Mexico, despite saying otherwise previously. So yeah, I'm not surprised to see stocks falling. We have been talking about that looming weakness in the SPY. It's why we've been avoiding taking any positions, and it's essentially played out exactly as we expected. We are in a bit of a correction, so we have to see where this bottoms out, if we can reverse, and then what the next step is here. We have the US dollar falling like the trade war is over. So the US dollar also looking pretty toppy, which is kind of weird considering that during kind of times of uncertainty, the US dollar is a flight to safety. But perhaps the US dollar isn't as much of a used as much of a flight to safety anymore, just due to kind of some of the macro or geopolitical kind of things going on in the world. But I won't digress into that too far. We see crypto falling like the bear market has just started. That's an over-exaggeration by a lot of means. Crypto's only down, it's not down that much off the highs. Like, we're down 20% off the highs or something like that. So nothing crazy right now. It's normal to have 20-30% corrections throughout bull markets during the uptrends. So this isn't outside of the realm of a normal correction in Bitcoin or crypto. We shouldn't just assume that the bear market has started. But that being said, we need to recognize the kind of risk that I'm talking about. We see treasury yields are falling like rate cuts are back, despite the fact that Jerome Powell has said basically no rate cuts until the middle of the year and the earliest. We're looking at maybe one by the end of the summer, and yeah, that's probably going to be it for the year. So treasury yields falling despite the fact that Jerome Powell is kind of signaling the opposite. We have oil prices falling like we're entering a recession. I kind of argue we've been kicking that recession can down the road for a while now. I showed you those treasury yield spreads, kind of watching the uninversion and the time after uninversion. So we're getting into that kind of timeline where if it is going to play out, it would kind of line up with prior recession timing outside of that uninversion. And then gold falling like we're on track for so I don't really agree with that either, because gold is basically at all-time highs. It's been ripping in an uptrend for the longest time here. So gold is not falling. It doesn't seem like we're on track for that. Not that we're not on track for a soft landing, I won't say that. But gold is not falling. Gold is really strong right now. So we're just going to flip over to the Bitcoin chart. Look at this, take a little idea of what's going on. So there's a few scenarios that I want to talk about for this market cycle. We're either looking at, so we've got the potential for a left translated cycle. In my opinion, that would mean our top is already in, so that 109,000 would be the peak for the cycle, and then we're due for just a broad bear market correction, downwards consolidation phase before we can kind of base ourselves for the next potential market leg up. So we see here, there is the other alternative. We're looking at a normal mid-cycle correction. So looking at just the past cycle here, we've had these sideways consolidation phases. So right through here, and right through here. This could be the start of our sideways consolidation phase. You see over here we had a 23% correction. Here we had a 33% correction from the peak to that low. Here right now we're in about a 21% correction. You can also see this is where we had that bearish cross of the 50-day under the 200-day moving average. Same thing right here, bearish cross of that 50-day under the 200-day, and we see our 50-day curling over, heading towards our 200 days. So we're looking for that. Hopeful we don't get that bearish cross right here, and we can just bounce and continue up. So for now, it just looks like another one of these sideways consolidations, but we'll be following this. If we lose this channel as support and we break below our 200-day moving average, then we're really going to need to do some work to get back above it, because we risk losing that actual uptrend structure of the market. I'll show you that on the high time frame, looking back at prior cycles. But for now, you can see essentially we did lose it a couple times here, but we were able to regain it as support and continue up from there. So just waiting for that confirmation, entering when we have it, and riding that trend up. Looking here, very similar RSI across the board here. So right at every low, essentially a very similar RSI. So nice to see similarities through there. Our DMI setup looks pretty similar across all three of these lows, of these current lows right now. And then we also have our MACD kind of right around similar levels for these two corrections here. So nothing to be super alarmed about yet. We are in downwards kind of price action, a downtrend. So I'm not taking any aggressive positions. I have a swing long of Bitcoin. I opened it at 87,000. I shared that in my Telegram group. It's free to join if you want to join. I share a lot of information in there as well. But just for now, as long as we hold in this channel, we're just looking kind of at more consolidation, and we're fine. We can continue ranging similar to what we did over here. If we start to break down, that's when we need to get a little more worried and really watch that price action. If we see something like this where we break these lows, kind of come down here, maybe we get a bounce from our 200-day and we reject from this resistance, coming back here, coming there, then this position right here, that's going to be really key to watch. So yeah, watching here, if we lose that 50-day and 200-day moving average, that's that downtrend price action that we're looking at. And then we don't really have a major VRVP profile until way down here at these lower targets. This would be kind of a left translated cycle bear market target, essentially in a worst case scenario. We definitely don't want to see that play out ideally, but we can't discount it either. I do think there is that potential. If we continue to see the SPY breakdown, we see continued escalations in terms of global trade wars, tariffs, or if we continue to see, negative effect from the unwinding of the Japan carry trade or other economic weakness across various economies, it wouldn't be surprised to kind of go into a little bit of a downwards phase in all markets. And if the SPY and macro markets are going to be trending down, Bitcoin's not going to be safe. It's not going to hold up. Bitcoin's very correlated. It's a risk on asset. When things look bad, Bitcoin and crypto and the risky assets, people will get out of them fast and go to those flight to safety assets. So when I talk about that, looking at gold, TLT. So that's also, if we flip over here, we see the SPY down another 0.5% today. So look at this, like kind of a triple top pattern almost, but broke below our 50-day, not looking good, lost that uptrend structure here. So SPY has a lot of work to do. We see TLT bouncing. I mentioned TLT as when it bounces, kind of showing that bonds, that flight to safety, getting a bit more of a bid. But we're just going to go back to Bitcoin because that's the one we really want to pay attention to and kind of compare this cycle to cycle. So I want to show you, this is a prior cycle comparison. We looked at the crypto specific indicators that everyone watches. So all the ones that are comprised all through these metrics, they haven't technically flashed to the extension of prior cycles, but I also, as kind of a chartist and analyst, I look at the trading view indicators and setup as well. And this is what I've shown you prior. We actually pointed out a lot of weakness right here. The price was 96,000 and it dropped to 86,000. So we avoided that substantial drop there while also taking advantage of a couple swing trade opportunities, booking profits during times of kind of downwards choppy price action where it's hard to take a position. Nice to be able to still get some returns even during those periods of price action. But what I'm looking at here, through this cycle, you see this is, again, that 50-day moving average on top of the 200-day moving average. As soon as we got well above that, and it kind of resembled this parabolic move, so you see right here, we basically broke above it, held it as support, and then it extended away from the 200-day. That was the first leg up in the market, so that's what we see over here. We got above it, we held it as support, essentially, and we extended above it. On our first leg, we got our bearish cross right here, and then we got another leg up where we came up here and then curled over, ultimately resulting in that bearish cross. So watching over here for these two moving averages, if we see that bearish cross right similar to here, you see how we came up, lost it, went up, rejected from the 200-day, lost the 50-day again. That was that sustained downtrend. So that's what we're watching for. We see the bearish divergence here from peak to peak. So similar to over here, peak to peak bearish divergence. We've got the initial 50-day, 200-day cross, initial 50-day, 200. This is where it lost the 200-day. We see our downsloping trend line on our RSI. We see our DMI setup also quite similar here, looking for that kind of bearish cross rate here, and then the RSI also, or sorry, the MACD also kind of a similar setup, you know, double green histogram followed by the red, 2 extensions with that bearish cross. So I have kind of showed this chart. I don't want to scare anyone, but I want people to be aware that the cycle top could be in. It's not my base case, and I want to see more strength from the general stock markets. And if we get good news kind of regarding some geopolitical tensions or economic tensions, then, you know, stock markets could just continue going higher. But, you know, my thoughts, I wait for confirmation on the charts. I'm not quick to rush into anything here. So we just want to make sure that we're managing our risk very well. I'm going to get rid of some of these drawings. But, yeah, so looking here, this isn't bullish price action. We essentially lost our support rate here, downtrend, and yeah, we're just coming back up. Probably reject from here, I would think, and then see if we can put in that higher low and continue on, maybe get back up to this 50-day. But for now, it does not look good. So getting back to kind of the 3 scenarios that I see for Bitcoin, we'll take a look at the weekly chart. So the first scenario, the most bearish scenario, it's not my base case, but if we go into further kind of economic turmoil or geopolitical turmoil, it could be what drives the market down, and if the stock markets are crashing, Bitcoin is going to be crashing with it. So kind of the most bearish case, the 2 peaks are in. This is our final peak here, and we're due for that bear market correction. So if we take a Fibonacci here from the low of the cycle, we'll take it from the very low of the cycle here to that peak of the cycle, we see that the 786 is where we found our low of the next cycle. So in the event that the top is in, this is a left translated cycle, look for price to come back to that 786 here as a potential low for the market, looking anything sub 35,000. I know that seems like a crazy drop, and it's, you know, if you're in crypto long enough in Bitcoin, you kind of get used to this. That's why all the skills I want to teach you are to stop us from buying up here, and we want to start buying down here and riding these market trends all the way up. So that's the first case, most bearish scenario. Stock market continues breaking down. We aren't able to get the relief rallies that we need, and then we ultimately end up bleeding back to these lower levels in this Fibonacci golden zone. If that happens, I'm unsure what kind of alt season there would be, if any. You know, we might get a bit of a dead cat bounce season in alts, which just means essentially just bouncing to those lower highs, continuing the downtrend, but these bounces can be pretty aggressive in low market cap assets, so it could still be pretty big. The second option that we're looking at is kind of just that traditional cycle, mid-cycle correction here, looking at, you know, 25 to 30% correction from the highs. We start from here, so if we're looking, you know, maybe we come down 20-30%, we just come below the 200-day like we did over here, break back above, and we can get another leg up. So that's the next one. That would be more of a traditional cycle that I'm thinking that might play out. So watching that as well, that's more of my base case for now until we break down, if we do. So what I want to watch is these prior cycle highs right through here. You see all that. Essentially, if we break below these prior cycle highs and we start to look like we're going to reject, you know, I basically am going to say that I'm kind of throwing my towel in for the cycle, because once we break below these highs, we've really lost a lot of that structure, and I think we are due to come back to those lower targets. So that's if we come back down here, we want to make sure that we're at least holding this support through here and then going on to our next leg up with a traditional alt season. Hopefully and ideally, it's also going to reflect in Ethereum, Bitcoin. And then alternatively, we're looking at a scenario where we are just in that sideways consolidation, and maybe we do get some relief and we can just break back up, put in a new high, and let alts go on a little bit of a near-term run. But ultimately, we might run out of steam and then kind of be due for that downwards price action. So just looking here, if we take some trend lines just through there and right through here, we'll take this trend line. Yeah, so if we can just bounce up here, we're going to have to do some work. So this is just a rough drawing, but essentially if we can reverse our price action, come back up here, get above this, hold it as support, we can continue to those higher targets, kind of that cycle target that I had within the 120s to high 120 to 140, 150,000, let's say, just kind of based off our logarithmic regression rainbow over here. You know, the price targets are very dubious, you know. I was happy to take a lot of profits at around 100, you know, 109,000, 108,000. That was within 10% of my target for the cycle. So it's like, sometimes it's worth it just to take profits. If you're up 700% and you're holding on to hope for that last 10% move, is it really worth holding it? You know, I say no, because look what happened since then. We're just down 20%. So just ready for any scenario here. I don't want to scare anyone. I just want everyone to be prepared for the potentials going forward. So just to recap, my 3 scenarios that I'm looking at: left translated, relatively no altcoin cycle, maybe a dead cat bounce rally for the alts, and then ultimately breaking down in the SPY, going into that broad market correction, dragging everything down to low targets. We've got our traditional cycle, where this is just our, you know, we have our 30% mid-cycle correction. We hold the prior cycle highs, we get back above our 200-day, and we move on to that next leg up, allowing for an actual alt season. And then my third scenario as a potential, we just reverse from here. We're able to go up, break out, put in new highs, get a little bit of a stunted alt season kind of in the near term, maybe not quite as durable or as kind of long a duration as the previous ones, before breaking down and going and retesting those lower support levels. So obviously, I don't have a crystal ball. I don't know what's going to play out. I just follow the charts. We follow the trends. For now, things are not looking good. I'm not really interested in taking any positions outside of short-term swing positions, and even those are quite risky. So just manage your risk, manage your emotion, follow your strategy, and trust yourself, and we'll navigate the rest of this cycle together. If you like the content, please like, share, subscribe. It all means the world to me, and I'll see you in the next one.